All right. Hi, good morning. This is Jeneen Poole. I am coming to you with two of my very good friends and some excellent resources when it comes down to the lending process. So I have here with me Tara and Randy, and yes, they are married. They are the power couple when it comes down to mortgages. If you want to know anything, these two are the dynamic duo, like Batman and Robin. They got it all together. So now I'm going to give
How's
it
it feel to be Robin?
start talking about what they do best. Take it away.
Well, my name is Randy Milam with CMG Home Loans. My MLS number is 280108. In my portion, I'm going to talk a little bit about the market. The market's been extremely volatile over the last year. We all know it. And it's going to be this way for about another year. Right now, currently, for the next 90 days, we are up. But the consumer confidence, which drives our market more than anything, is very, very high. But as far as feeling that number, my prediction is we still probably by the summer start seeing some relief there, but it's going to take 18 to 24 months for to catch up to the narratives that are out there from some of the other networks or news outlets. That I think that's a little aggressive of a narrative of changing anything quickly. But I
Got a quick question for you, if I might jump in.
Yes, ma'am.
Just want to ask you, you brought up something that I think is really good because there's a lot of people that are calling up asking me, their realtor. You would think they would call their loan officer first, but they're asking the realtor. And so the question I've been getting is, are we getting down to interest rates by the end of the year of like 1.99, 3.99? And I just wanted to ask you, why do you think we won't get there?
Well, that's sort of an easy question for me. So for anything, if you go back to what we want to be as 2018-19, and it dries off the 10-year treasury note, and that to be like 2.89 on a yield on the treasury. And so that was one of the best years we've had. So I know how the Federal Reserve gets below that number, and that was during pandemic. So you're not going to see those numbers unless you have a global pandemic again. And in a short sentence, what the Federal Reserve did was bought their own stock to America. And when you flood your own stock with billions of dollars cash, you drive down the yield, which in turn drove down the rate. That was part of the CARES Act during the stimulus of the pandemic. That is over. So we hope to, in our market, to get back to 2018-19 on the yield, which in turn would be a great rate. It would be still the high fours, mid fours. And that's where we were in 2018-19. That would be the goal. The unrealistic goal is going to be, unless we're in a global pandemic. And that was done during two administrations. So it's a maneuver that everybody gets wrapped up in, but the Federal Reserve only controls that. They do not control mortgage rates. That is the mortgage-backed securities on Wall Street. They control is the prime rate, which everybody's talking about now, because when you hear that Federal Reserve lowered rates, they're talking about the prime rate, the overnight lending of banks. They are not discussing the 10-year yield on the mortgage-backed securities on Wall Street.
Okay, perfect. So, what is a realistic rate for people to expect right around now?
6 and 7/8 to 7.5, depending on credit score and program. You could buy your way down to 6 and 5/8. Anything past that will be extremely expensive, and that's a snapshot of the last 7 days. The market is volatile. I wouldn't go anything past a snapshot of 7 days now because rates have moved quickly. We've had our rates for as low as with a little bit of buy down as 5.99 in October. And then we had an election, and then there's a lot of profit taking going on right now because the Federal Reserve is not meeting again until February. So there's just profit taking going on in the market because everybody's excited. So that would be my educated guess. This is still a guesstimate. I'm predicting as everybody else predicts on every news outlet, and I watch them all.
Great. Thank you. So, I'm sorry, I know I interrupted your morning minute.
No,
But
those are great questions. I get this all the time too, and the biggest thing you've talked about, and I've talked about a lot of realtors, these false narratives of 1.99 rate. And I say this so sincerely to everybody that's listening. If you as a consumer see a rate through a monitor, it's an advertisement. There is no gospel. Only I and federally licensed people can lock loans.
Okay. Well, that's really good. I'm glad you were able to shed some light on that because that is a real big myth. So before we jump to Tara, am I saying it right, Tara or Tara?
Either one is fine. I'm here both.
Well, before we jump over to Tara, I'm going to ask Randy one more question. What is a real list? What are some programs that work, and why? If let me rephrase that. Why should someone buy now? Is it still a good time to buy a property? How can we make it affordable for the buyer?
Always affordability is buy what you can afford. That's the biggest affordability is buy what you can afford, and not buy over your means. I mean, there is reprieve coming, but as you and I have talked many times, buy what you can afford today, because the future is the future. As much as I sit here and predict what's going to happen, it's a prediction. So now we have plenty of tools for any customer that gets into the market. But let me answer your question. As me and you both know, inventory, inventory, inventory. And that's why it's a good time to buy, because we have not had inventory since 2019 at the levels we are. So, so buy what you can afford. Now you got the inventory to go look over. We'll put you in a program that makes it affordable. And then there's avenues down the road that we hold that we can help you out later. We have rate rebounds. That means we don't pay for lender fees on refinances. And that's going to come. And everybody that closes with me has that opportunity of a rate rebound program for our customers. I'm thinking it's good for the next 5 years. But if somebody looks somebody in the eye like I'm looking at you, Jeneen, I can tell 24 to 36 months, we should have you refinanced, as long as your payment qualify and so forth. But we think the rates that yield on 10-year note will rebound in the next 24 to 36 months. And it's called the core inflation. Food, fuel, and utilities drive our rates more than anything.
So if I can kind of piggyback on that a little bit. So for those of you who are wondering why should you buy now, right now prices on homes are going down. Even though we have a little bit of a higher interest rate, you can make this a very good business decision, not just a want decision of I want to be in a house, but make this a very good business decision, because why the prices of homes are going down, even though the interest rate is higher, from what Randy is just saying, we can get you into a home with a lower price point on the home. And then when the market drops and the interest rates start to rebound a bit, then we can go back with Randy and refinance. Am I hearing you correctly, Randy?
Yes, ma'am, exactly.
In the lower rate. So that way you can get the best of both worlds. Get a house that you want at a cheaper price, because sellers are coming down because the rates are going up. So they have to adjust the home price in order to make it affordable for the buyer. And then when the markets rebound, guess what's going to happen if you wait? Then we're going to do this. Home prices may go up and interest rates come down, but they're not going to be right here together. So this way you're getting the best of both worlds. You buy now, refinance a little bit later when the rates drop, and buy, like Randy said, at where you can afford. Don't buy over your means. Then you've got the perfect storm and you can have everything you want with that. So now I want to jump in, because my next question that I get all the time is, why am I getting all these people calling me? Who is this loan officer? Who is this processor? What is all of this? And why do I need all of these things? So I want to get the power couple to tell you, and I want to get, I'm sorry, Randy, but the brains behind the loan officer. So I want to go to the sales manager who can tell us all about the loan process. Tara, take it away.
I have a good position at the company because I get to oversee the loan from the start to the finish in all the different departments that it interacts with. And your loan is always going to start with a loan officer. The loan officer is the person that's going to pre-qualify you, let you know what you afford. They're going to help you select a program that's the most financially beneficial for your specific needs. And they're going to also talk to you about pricing. And that pricing is interest rates and closing costs. So the loan officer sets up the transaction for you individually. Once they're done with that, they're going to pass that off to the loan processor. And the loan processor's job is to gather documentation and also to verify. Believe it or not, you're going to provide us with a lot of documentation, pay stubs and W-2s and bank statements, but every single thing in that file gets verified by a third-party source. So the processor is responsible for performing all of those acts. And then once you contract, they're also going to be responsible to order services. They're going to order anything on the credit report that might need to be fixed or updated. They're going to order the appraisal. They're going to interact with the title company to get the title work in, the insurance company to get your insurance verified. Processors are verifiers. So they're going to interact with just about everybody in the transaction to get all the documentation verified. Then once they feel like they've got a good package put together, they're going to pass it on to underwriting. And underwriting's job is to calculate and validate. They're the ones that calculate your income, they calculate your assets, they're going to be reviewing all the documentation that the processor provided, and they're going to make sure that it validates to the underwriting guidelines for that program. It's their responsibility to make sure it conforms to the program. Once they are satisfied that they've got a package that is complete, they're going to issue something that's called a clear to close, which is what everybody is waiting for in the transaction. Once you're clear to close, our closing department takes over, and they work in conjunction with the title company. The closing department is going to reconcile all of the costs in the transaction. They're going to gather invoices from everyone, the surveyor, the insurance premium, the appraiser, the title company's fees, our fees, every cost related to the transaction. And they're going to work with the title company to come up with your final closing disclosure. And that closing disclosure is going to itemize all the costs and what you're going to need to bring to closing for your share of the cost. They also are going to draw the closing documents with the closing attorney. Here in Texas, we have to draw docs through an attorney. Not every state does that, but our state does. And once they do that and they're satisfied that they're reconciled with the title company and they've drawn the papers, they'll send them to the title company. And that's when you go over to the title company and you close on your transaction.
Okay. So I got a question for you on the process, and either one of you can jump in on this one. But I had some folks ask about, why do they keep asking me the same stuff? I've already given the loan officer all my bank statements. I've given them my W-2s, and now I've got this processor calling me. And then later, right before I close, here comes an underwriter. Why are they asking me for these same documents over and over and over again?
Randy, do you want to speak to how many guidelines we have in our industry?
Yes, let's go with the most common thing of the borrower saying, because I get this too. Well, I've already given it to you, and then I've given that to you. So we'll ask for a complete bank statement, and so the borrowers will go through and they'll see that it says 1 through 5 at top. They'll give us 4 pages because that 5th page is blank. But we don't know it's blank until you give it to us. So that is something that it's just that is probably the most common thing, of every consumer. It's like, why do you need the last page? It was just my checks. Well, we don't know that until we see it. So if we look at, and every underwriter looks at, every document looks at how many pages, 1 through what? If it's 1 through 20, we have to have 20.
Okay.
Only the underwriter
And
gets
we also analyze everything on that document. So we're not just looking at how much money you have in your bank, but we're also seeing what the source of funds are for your transaction. So if you have unusual large deposits, we have to verify them. Now, the reason that Randy would ask for something different than my processor or my underwriter, Randy is going to pre-qualify you. He is not going to dissect and analyze every piece of paper. He's going to look at the overall and find what fits your financial needs the best. The processor, like I said, they don't just document, but then they verify. And sometimes the verification is not quite the same as the documents that you provide. And there's many, many reasons for that happening. For instance, you can say that your salary is $100,000 a year, and we get the verification back, and your year-to-date earnings don't match that salary. So we're going to come back and say, why? Well, I got a raise 2 months ago. Well, then that's why. Simple. So there's a lot of questions that can come up when we're analyzing the details of the documents. And then, as I said, the underwriter is the one that's validating to the program. So they're putting their name on this loan. They're making sure that every question an auditor would ask, every question that someone that's reviewing the loan to see if it does match the program, because they do that post-closing. We have many auditors that look at our work. They are the ones that make sure it's perfect. So if there's any question that they can come up with, they ask us to satisfy it in anticipation that anybody that asks the question after you close will have those answers in the file.
Okay. So what about if I get a borrower and they want to apply for a loan, what would be the thing you would need from them? What is that? Like, what are the programs? What type of loans? What makes one loan type better for a borrower versus the other?
Well, I'll go ahead and answer that. So first we start off, there's a general needs list, just 1 month most current paycheck stubs, W-2s, most current. And if we need tax returns, if you're self-employed or own investment properties. But first we get the application and then I review it. And then I call the borrower and ask them what their goals are. What do they see envisioning? And then I can pick from, depending on their clients or qualifications, of what program might fit their goals better. And that's just me and them having a communication back and forth, and I tell them everything right now is just about me and them communicating what their goals, so we don't have surprises.
Okay. And Randy, I just want to ask you another question, and sorry, you can answer this too, but how should a borrower pick who their loan officer is? Should they just go with the first person that they come through, go to their bank? What is your recommendation on picking your loan officer?
Well, that's a great question. And I tell a lot of consumers as they say, well, I'm talking, I say, you just got to listen to the person that's talking to you. Do you feel comfortable? Do you feel confident? Because I am a project manager. So the vision of a loan officer, of somebody sitting in the bank making decisions, is just not what I do. As a federal originator, I am a project manager and expectations. So I listen to the borrower's needs, what kind of jobs they have, and set up the expectations. Then I talk to the realtor, what we need, expectations. That's what a good project manager does. And as any human player, as you start talking to somebody, you can feel the confidence and security in the talking, and just go with what you feel comfortable with. We're all go the same well for water, meaning the Fannie Mae, Freddie Mac is federal institutions we get this money from. So we're all going to be right on the same. We're not like short-term lending where one's 13 and one's 8. If you're an A paper, which is Fannie Mae, Freddie Mac, FHA, VA, USDA, we're all going to the same well. We just differ a little bit. So then it's about project managing. Just understand. So you can go to your job and feel comfortable that our team staff is handling your financing. It takes 4 corporations to close a loan. 4. And that's what we project manager. And then we get from getting the documentation, getting the loan submitted to processing, underwriting. That's about 10% of the loan. There's the appraisal, title, tax certificates, survey, and then all the third-party applications we have to do. And so that's what takes the majority of our time. So that's how I would tell anybody, just go with how you feel comfortable, because we're doing a lot, because and I say this to a lot of people, I control a lot of the finances, and there's not one college course in America that tells you how to do my job. So there's a lot of trust you have to have, because there's a lot of money on the table. Because there's nothing worse than me and you both know. You get earnest money inspections, then you find out the guy didn't look at one paycheck stub, and then you're out $6,000. And it's not fun to have those conversations. As me and you have both had to tell people in life, it's just not cool. So a good loan officer can see down the file and see what troubles and what problems we address them up front to make customers at ease.
So what would you say that a buyer should have on hand when it comes down to applying for a loan? How much money do they need?
Well, depending on the programs, again, that's just a good conversation because we have down payment assistance to assist. We have low down payments. We have low to housing income programs through Fannie Mae and Freddie Mac. We have veterans, and then as you know, just understanding the loan, then I get with the realtor, and then we can get seller contributions. So there's many facets to that of just trusting your team. That, as I always say, the realtor, as you know, Jeneen, is the checks and balances of lending. Y'all know who good lenders are. You know who closes on time. You know who calls everybody back. I mean, the borrowers don't know. And I always tell every borrower, lean to your realtor. As you said a little bit, they always call the realtor. Why? Because the realtor is the quarterback of the transaction. However good I think I am a skilled player in this transaction. You, the realtor, is the quarterback.
Yeah, that's a good point. And I want to just tell you, I know I've worked with um, a buyer that both you and I worked with previously. And as much as I tried, this buyer thought they knew more and listened to someone else, went with another lender, and we ran into what I absolutely hate: communication issues. Can't get anybody on the phone. And what I love about working with the two of you is if I can't get Randy, I got Tara. And if I can't get
Yes.
Tara, I got Randy. So I know that communication is key when it comes down to it. It's like in any relationship, communication is your top, point. If you got bad communication, you got bad everything. So
That's right.
um, I think that is key. We are approaching the end of our time. I want to thank you guys so
Can I just
much.
say one more thing real
Yeah.
quick to Ray's point and to yours. If a borrower is thinking house and they want to prepare themselves, they need to start by being aware of what their credit looks like. They need to also start by leaving their money alone. Don't move your money around to various accounts. You need to leave it where it is because we're going to look back at your money for 60 days and everything you move around has to be documented. And also, go ahead.
Have it in an account. Don't just come up like you got cash in the back.
Yeah, cash on hand's not something we can source. So you do want to have it in your account and you want to have it there for 60 days. And so it's not ever too early to get pre-qualified because you may have something you need to work on your credit and we can advise you in that way. You may need to save a little bit more money and we can advise you in that way. So the earlier the better. Even if you're not planning on looking until the summer, get pre-qualified now. It doesn't hurt and it gives you something to strive for and it makes sure that you're ready when you are ready to go get in the car with Jeneen and go find a house.
That's awesome because I want you to have your pre-qualification before we get in the car. Because the last thing
That's
you
right.
want is to find that dream home and not have your pre-qual, not just a pre-qualification, but a pre-approval, and then you can't even proceed because someone else beat you to it because you were still working on getting approved.
Right.
Yes,
So
ma'am.
Tara, I want to dive down a little bit deeper into the whole conversation about the cash on hand, what you need, and some of the different programs that are out there. I really want to continue these conversations with you guys, and because there are just so many questions. How do I get approved if I don't have this type? If I get paid cash, how do I, or I'm self-employed? So let's plan on talking more. And if you guys out there have more questions, please by all means email me, text me, and let me know. And then I'll get those experts online to talk to you because I'm telling you, if you are buying a house, you definitely need Batman and Robin in the mortgage lending world. You need a Randy and a Tara in your pocket. You need that support because they will help you figure it out and they're excellent at communication. The last thing you want is a realtor or a loan officer that does not communicate with you. Communication, communication, communication is the key to getting into a home. So, with that being said, again, Randy, Tara, thank you so much for coming on here and sharing with us your wealth of wisdom. You're like the Solomons of the mortgage lending. I love you guys. Appreciate you.
Thank you, man.
And
Thank you. It was fun. I like this.
all right. Well, thank you again for tuning in, and we will see you again. We're going to try and do this on a weekly basis to bring you the most relevant information of what's going on. And I look forward to it. Talk to you guys soon.
Thank you.
Bye.